Welcome to Saltovation. The Saltovation Show is a podcast series featuring the leading voices in salt, where we talk about the issues and strategies to help you make sense of state and local tax.
Hi, everybody. It's Stacey and Alex from Saltovation. We're here today to talk to you about some best practices around state and local payroll taxes. So that includes withholding.
Our favorite topic.
Yeah, well, I'm sure everybody's favorite topic. This is a riveting topic for everybody. But around withholding, unemployment, and special types of taxes that certain states have, all things payroll, honestly. Like I said, some of the best practices that we've tried to put into place based upon some experiences that we've had, good and bad. With that, I guess talk to me a little bit about some of the experiences you've had with payroll providers and transitioning and things like that.
Thanks, Stacey. Well, so my mother said, if you don't have anything nice to say, so we're not trying to, disparage anybody here, obviously. I think it's been somewhat, and I'm not naming any names. It's been what we're seeing recently with, so big picture, right? We, with the pandemic and this 2020, 2021, we saw the workforce move home, right? So now we're not focused on working from the office anymore. Now we still have a lot of people working from home. So the home becomes the office. If you kind of ignore the special carve-outs that states had for during the COVID emergency, now we're kind of seeing the states revert back to regular withholding rules and sourcing rules. So if the employees are still working from home, and this is all general, their home becomes their work location. So what we're seeing is obviously a lot more employees are now working from home, and we have to reevaluate our payroll map, so to speak. And a lot of, and then new hires, the workforce is, they're not coming into the office anymore. We're also seeing this in the guise of companies, our clients switching away from PEOs and starting to manage their own employer payroll accounts. So there's several reasons why these issues have come up, and overall, it's been frustrating for our clients because I don't think they realized in either of those kind of scenarios how rigid these payroll companies are. They're not getting the support that they, I guess, expected, especially in the PEO example. And I know, Stacey, you're dealing with a client kind of in this situation as well right now. The PEO, for whatever reason, these companies are switching away from them. They'd provide a certain amount of guidance and consulting, right? Some advice that was given as part of their services. And when switching to just the provider, processor, that disappears. And I think our clients were kind of left a little bit out in the cold, with their questions on how to handle those transitions. Is that fair of what you saw?
Yeah, no, I would say that's very fair. And I don't think that the taxpayers fully understand or appreciate the maybe level of service that they are signing up for. A payroll processor, that is what they are. Now, mind you, they may handle some other accounts, whether it's 401ks, et cetera. But, what you and I deal with on a, not daily basis, but for these taxpayers is related to the payroll taxes. So the remittances of the withholding and the employment. And I think, just even in the, some of our clients that have switched, they don't even fully appreciate the fact that the payroll processor is not getting the registrations for them. So what happens is that under a normal PEO situation, now this isn't true in every state, but a lot of states say, okay, hey, PEO, we're the employer of record, and then they submit all of the returns, all of the payments on the company's behalf under their information. Well, not every state looks at it that way. Some states don't actually recognize PEOs. However, those that do, then when you bring that in-house or move to a payroll processor, the company's left to get their own account numbers. Yep. Well, that takes a lot of time. I mean, The registrations themselves, they are what they are, but there's a lot of information that is required, similar to, like a sales tax registration. There's owner information that is required. There's, corporate officer information that's required, et cetera, because, they need that legal liability piece covered. Just the information needed to do the registrations alone is a lot. But then the time that a state...
The timing also, yeah.
Yes. So the time that it takes for a state to even process the registrations and then give the numbers is a little bit of it can be a game, honestly, because I know that for one of our clients, they changed from a PEO to in-house to a payroll processor mid-month, mid-quarter. Mm-hmm. And so they weren't set up in a lot of the states. And so they were late to the party and late to make payments, et cetera.
God bless those states that will give you an account number right away, right?
Yes.
They will, you hit submit, and within 5 minutes in your inbox, you have an email that says, you've been assigned such and such account number. This is your, your rate for UI purposes. I mean, thank you, those states, really,
right.
Because the converse of that is, hey, we will send you a welcome packet with your account number and rate information, within 3 to 4 weeks in the mail. Snail mail. And like, come on.
Right.
It's 2021.
Very maddening.
And nobody's in the office. A lot of employers have some people now, but I remember doing this, early 2021, late 2020. Nobody's in the office. There's nobody to get the mail. It just sits there in the mail room, and just good luck getting that information otherwise. It's just it's really it's quite frustrating. I'm going to stop my rant now, but I feel the same way about this as I do about fax machines. So
so I think long story short there is that if a taxpayer is signing up with a payroll processor, just keep in mind that that's their job, not really outside of that responsibility. They're not typically going to get the registrations. They're not typically going to do back filings even. So let's say in this, an example I just gave, it took a while to get some of these account numbers, and the processor was hands off. They were not going to do any prior filings. It was only on a go forward basis. So these are just some things I think taxpayers have to keep in mind and just be aware of if they are looking to either A, hire in a new jurisdiction, or B, hire a new payroll processor, quite frankly,
right.
Or move away from a PEO, et cetera.
Right. And something else that I'm kind of seeing is, since we're on the topic of a mobile workforce and a remote workforce, is the internal mapping of these employees. And I have a client, we did a payroll, like an internal audit, not an external audit, just an audit of the mapping of where these people live and work. And what we saw was a lot of employees were still mapped to a home office, and withholding was based off of that. Well, that's not usually the facts anymore. So it's a good idea to go back and just revisit employee mapping to make sure that the employee's work location, which is for these remote folks will generally be their home state, is updated, and withholding is based on that location. Again, just generally, but reviewing that data is probably a good idea these days.
Right, and to coordinate departments, right? So I think, we see where recruiting is going out and doing their thing, and they're super excited about getting somebody hired and onboarded, et cetera. But then HR might not be fully, aware of where they are. Maybe they're just getting mapped to an office as opposed to understanding where that person physically sits.
That's right.
It's just more of a coordination effort amongst departments.
Right. Yeah. That's a great point. The office where somebody is supervised out of, or is kind of
old, I guess.
Yeah. Is not the same as their work location. Pre-pandemic, I think that would have been those two generally would have lined up, but nowadays that's not true anymore.
Yeah. No. Absolutely true. And we've got people moving around, right? So we've got a little bit of a hybrid workforce going on, right? Where it's maybe they're going to the office for part of the time and they're at home part of the time. So it can create some complexities around this.
Yeah. Anyway, so takeaways: review your employee mapping, and we're certainly not advocating for PEOs, but but they do a lot.
They do. Be careful with your payroll processors. Just be aware of really like the level of service that you've signed up for.
Yeah.
So, and if you have any questions, reach out to Alex and I at Saltovation. Thanks, everybody.
Thanks.
This podcast is for educational purposes only and is not intended, nor should it be relied upon as legal, tax, accounting, or investment advice. You should consult with a competent professional to discuss specifics of your situation and the applicability of the information presented.